Hello and welcome to The Point World Affairs. I'm Tae-sang-mi. The financial crisis in Turkey, triggered by a free fall in the local currency lira and its excessive current account deficit, is casting a shadow of uncertainty over the global economy. Its economy, which is also being plagued by rising foreign currency debt, is facing an even greater crisis due to political tensions and a trade spat with the United States. So what effects will all of these developments have on the global economy? For that, we have with us Professor Shin Se-don, Professor of Economics at Sookmyung Women's University. Thank you for joining us today.
Pleasure.
Before we dive into the details, let's get a quick recap of the current economic situation in Turkey.
After U.S. President Donald Trump announced in early August that he would double down on tariffs imposed on Turkish steel and aluminum, the value of Turkish lira fell more than 20% against the greenback. The hit not only prompted a large number of Turkish people to withdraw their money from the bank, Asian stock markets were hit hard as well. Compared to the beginning of this year, the value of the lira has plunged roughly 69%, sending shockwaves throughout the Turkish economy that's suffering from internal and external factors. Over the past few years, Turkey has emerged as one of the fastest-growing economies in the world. Not only did it perform better than other major economies like China and India last year, Turkey reported a 7.22% rise in its GDP in the second quarter of this year. But this overwhelmingly positive growth was the result of Turkey's debt acquired in support of economic growth. The International Monetary Fund estimates that Turkey's debt is around 50% of the country's overall GDP. What's more, with the inflation rate standing at 16% as of July this year, concerns about Turkey's economy continues to persist. The Turkish lira has somewhat stabilized after financial authorities announced measures to curb fiscal spending, but anxiety over the financial crisis have not abated, as international credit rating agencies have relegated Turkey's sovereign rating. The problem is, it's not just Turkey's economy alone that's at risk. Experts say the financial plight is set to negatively affect emerging economies such as India and South Africa, along with European countries as well. While many analysts say that Turkey will need help from the IMF to recover, President Erdogan, on the other hand, is strongly opposed to the move, saying that it will be an act of giving up political sovereignty. Instead, he's appealing to the public to sell their gold and US dollars to support the country's currency. On this week's The Point World Affairs, we talk about the cause of the financial crisis in Turkey and its effect on the global economy.
Right, Professor. Turkey has been one of the fastest growing economies in the world. It had the 7% GDP growth rate over the second quarter of this year already. So why are they facing this financial crisis?
On the face, Turkish economic growth has been pretty fast, but most of the economic growth in Turkey has been related to government-initiated infra kind of investment. And most of the money has been coming and borrowed from other countries, mostly from America. So fundamental economic growth of Turkey has not been stable. It's not coming from trade, exports, for example. And on top of it, the new president has been pretty anti-American in their political sentiment. And actually, one of the American priests has been kept under house arrest for the suspicion of espionage act in Turkey. Trump administration has been asking immediate release, but Mr. Erdogan refused it, and that's why President Trump has doubled the tariff on the steel export to the United States from Turkey. So the initial impact was 50% tariff on Turkish steel products to the United States. And that kind of action by Trump administration has triggered kind of a political sensitive in the investors in that area. So they decided to withdraw their investment from Turkey, and that has raised concern about the value of the Turkish lira, and that's why the value of the Turkish lira has plunged more than 30% in a couple of days.
Do you see that this is a problem, a systematic and economic structural problem within the country in Turkey?
Yeah, Because the industrial competitiveness of Turkey has been pretty weak because of the political situation surrounding Turkey and the political kind of uncertainty in the Turkish administration. So the Turkish has been lacking in industrial competitiveness, and only their economic growth has been coming from infra investment, mostly from money from outside. So apparently it looks like a pretty fast growing, but the fast growing itself is very unstable because most of the economic growth has been actually borrowed growth.
Right. So if their economy is actually based on the foreign investments, then how about its impact on the global economy?
In the 1997 crisis and the 2008 crisis, a number of crises has been initiated from one country and spread over to other countries because many other countries had the structural problem of the huge international debt on the one hand and the very sluggish economic growth based upon lack of competitiveness and inflation. So there are complicated factors work together for the development of global crisis. But this time, initially it happened from Turkey, and at the first, some emerging market has shown some kind of sensitivity to what happened in Turkey. But all the shocks in the stock market and exchange market has died down within a couple of weeks. So I don't believe this kind of a shock from Turkey will evolve into the crisis like 1997 or 2008 that we have seen in the past couple of decades.
Right. So I see that you have a little more positive view on this ongoing crisis.
Right.
Let's connect to a local expert to find out.
U.S. President Donald Trump and Turkish President Recep Tayyip Erdogan met at the White House in May last year. Up until this point, relations were not bad. However, relations between the two countries changed dramatically over the course of a year. At the heart of the international diplomatic and economic crisis is Andrew Brunson, an American pastor who has been detained in Turkey on charges of espionage and links to terrorist organizations for nearly 2 years. Despite repeated calls from the U.S. for his release, Turkey's court remains obstinate on his detainment. At this, President Trump imposed high tariffs on Turkish steel and aluminum, which sent the lira plunging. The Turkish government also responded by imposing retaliatory tariffs on U.S. cars and alcohol. And as the Turkish court repeatedly refuses to release the pastor, President Trump warned of further economic sanctions. The worsening diplomatic row is sending ripples through global currency markets, including those in Europe and emerging markets. Experts also say that the conflict is due to clash of interests surrounding regional security, as Turkey, along with Russia and Iran, is seeking out independent solutions to the Syrian civil war and excluding the U.S. from many issues. With President Erdogan also determined not to back down from the conflict with the U.S., Turkey's economy is set to continue to suffer. What impact would Turkey's financial debt crisis have on the global economy? And what's the public sentiment in Turkey and possible solutions to resolve the conflict?
Now let's connect to Steve Hankey, professor of applied economics at the Johns Hopkins University, also one of the world's leading experts in measuring and stopping hyperinflations. Welcome, Professor.
Hello, good to be with you.
Some criticize that the U.S., which has been waging trade wars with China and Europe, is shifting its target to emerging economies like Turkey. What are your thoughts on that?
Well, the U.S. position, I think, is incorrect. Sanctions, I'm opposed to sanctions in any place. So there should be no sanctions on anyone. I'm opposed to tariffs any place. Sanctions and tariffs are exactly the same thing in terms of economics. And they interfere with free trade. And free trade is good because free trade, the buyer agrees, the seller agrees, let them trade. If they agree, let them trade. So we have governments interfering all over the place, and the U.S. is one of the worst. So these policies that are being spawned by the U.S. to put in sanctions and tariffs are extremely bad for everyone, including the U.S. citizens.
Then how do you think the Turkish government should respond to this crisis to minimize damage on their end?
Well, the problem with most of these emerging market countries is that their internal economies are broken, and they have very poor economic policies. So Turkey, all these countries should adopt what I call a Singapore strategy. The Singapore strategy, and when Singapore became independent in 1965, Lee Kuan Yew was of course, the leader for a long time in Singapore, and his strategy was, one, to have stable money. So they installed a currency board in Singapore, and the currency board issued Singapore dollars. The Singapore dollars were backed up 100% with reserves. Everything was stable. It was a perfect system. They also had competitiveness, so they had free trade. They also had no foreign aid. That was one thing. Lee Kuan Yew didn't want to pass the begging bowl. That was the third thing. And the fourth thing is that they had security and protection of private property rights and a good judicial system. And the fifth thing is that they had a small, lean and mean government, efficient government, small government. And even today, for example, they have first-class people in the government. They pay them first-class wages. So the Minister of Finance, actually his annual salary, not including extra benefits, is $1.3 million US.
And apart from the solutions Turkey and other emerging markets should follow and pursue, such as the Singaporean model that you have mentioned, what about the global economy, global market? What kind of responses do they have to lead?
Well, the global market is something that is an aggregation of what's happening in individual countries. So if the individual countries don't fix themselves, the damage will be worse. The sanctions and tariffs impose a lot of damage on everyone. Sanctions don't work. That the scholarly literature on sanctions shows they never work. They never achieve their objective, and they have all kinds of negative consequences associated with them and collateral damage. But the global economy is a network of individual businesses, not even countries. It's businesses and people that make up an economy. Countries aren't like a company. I mean, they're in Korea. What's Korea? Well, it's a lot of individual companies and businesses. Some of them fairly big, by the way, but they are the ones that will be damaged.
Thank you for your insights. This has been Professor Steve Hankey from Johns Hopkins University in Baltimore. So, Professor, how do you see Professor Hankey's analysis? Do you agree with him?
Well, the Professor Hankey has been pretty strong proponent of free trade. I 100% endorse that. And he emphasized the Singaporean strategy. But the key question is whether Turkey could follow that. That's another trouble. I mean, the Singapore populations are several millions. But for the Turkey, the territory, the population, and history, it's a big difference from Singapore and Turkey. So even though we agree that stable currency and 100% reserve, competitiveness, everything, small government, a very efficient government, even though we accept that, when you apply that to Turkey, whether Turkey could be another Singapore, this is totally different and very complicated issues.
I understand. So you're saying that the model could be ideal, but it is really hard to follow that model and actually be successful.
Yes.
And going back to the Turkish lira crisis, I hear that Turkey had these kind of financial crises in the past too. But is this actually similar to any other global financial crisis that other countries has experienced, or how is it different?
Well, the main reason that Turkish lira has been falling rapidly for a couple of days is because, as I said, foreign capital, foreign investors withdrew their money out of Turkey. That has been the trigger point. And the key question is, whether that kind of action will evolve into a kind of a bigger and more severe economic trouble. That depends upon the capacity of federal banks of the Turkey to kind of counteract against that kind of a capital flight. And one of the key elements is the Turkey should find another country to help him out. And in this case, I think there could be China, there could be Russia, or there could be any other country with the sufficient reserves. I think it's pretty possible because there are so many countries with the sufficient reserves to help him out. So in this case, as I said, this is a pretty political, American and anti-American. And there are many countries in the anti-American groups to help Turkish out. So I don't think this kind of a shock will be kind of evolving into kind of a major global financial crisis.
Political reasons also had a lot to do with the current financial crisis in Turkey. For that, we connect with Aykan Erdemir, Senior Fellow at the Foundation for Defense of Democracies and a former member of the Turkish Parliament. Good to have you on, Aykan.
Hello, good to meet you too. Thanks for having me.
President Erdogan is strongly opposed to the IMF bailout, which is emerging as a strong, viable solution to the lira crisis in Turkey. He is also responding back to the U.S. with retaliatory tariffs. Do you think the Turkish people see eye to eye with the President Erdogan and how he is handling the situation?
Turkey is a deeply divided society. It's the same when it comes to politics, and it's the same when it comes to the economy. Latest polls show that, again, President Erdogan has a sizable support base when it comes to his handling of the economic crisis. He has presented Turkey's economic downturn first and foremost as a global conspiracy, as an economic war waged against Turkey by enemies outside. And he has been pointing the finger to the United States. He has argued that if it weren't for the US sanctions and pushback, Turkish economy has been on track. Now, of course, there is also the other half of Turkey. The Turkish opposition across the spectrum has been criticizing Erdogan's mismanagement of the economy. For example, Turkey's current account deficit, Turkey's credit-driven growth, which basically fueled Turkey's real estate bubble. People have been criticizing Turkey's crony capitalism and rampant corruption in Turkey. So again, there are very different takes on the economic crisis in Turkey.
And judging by the developments going on inside Turkey, it seems like President Erdogan is looking for a new economic alliance. So do you think that China or Russia perhaps can replace this role?
A vast majority of Turkey's foreign direct investment comes from the West, the European Union and the US. A vast majority of Turkey's exports go to the West, again, the European Union and the United States. Both Russia, Iran, China, Qatar, when it comes to buying Turkish goods, these countries are at the very bottom of the list, meaning these countries are not a replacement for Turkey's Western markets. And interestingly, Turkey has a huge trade deficit in its relations with these countries. So the relationship is extremely asymmetric. Turkey is a good market, for Russia, China, and Iran, as well as Qatar, but they're not good markets for Turkey.
So it seems like you're more inclined towards recovery with the Western alliance. But what about some short-term and long-term solutions?
And what Turkey needs to begin with is to reinstate trust in domestic and global investors. And this is a long path. It would require Turkey's return to the rule of law, due process, strengthening private property rights. At the same time, it requires Turkey to reverse it's capital flight and brain drain. There is a need to invest in education, in R&D. Also, there is a need to invest in high value-added products to shift the economy's focus from real estate-led speculative growth to an export-oriented, kind of industry-based growth. But for the time being, there doesn't seem to be any move to that end.
You just mentioned a lot of things ranging from reinstating trust and to export growth. So how long do you think this will actually take?
This time, most analysts are talking about an L-shaped recovery, meaning it will be a long, slow, and painful recovery process. This, of course, has to do with both Turkey's internal dynamics, the government's inability to tackle the crisis with structural reform, but also it has to do with global dynamics. The US Federal Reserve tapering. Countries like Turkey have much more difficulty in accessing foreign currency loans. And this will compound Turkey's problem. And I would argue that that's yet another reason why Turkey should immediately, without losing any further time, recognize the structural flaws in its current economic management and start on the path to recovery.
Thank you, Aykan. This has been Aykan Erdemir from the Foundation for Defense of Democracies. Right, Professor, so let's turn a little bit towards the United States. So President Trump is already waging a lot of trade disputes with many other countries, including Turkey and China. This is actually going to bring negative impact to the U.S., don't you think so?
Yeah, I mean, as Professor Hankey pointed out, this kind of ultra-conservative protectionism reactivated by Mr. Trump is going to hurt America rather than help. It takes a little time for American people to realize this kind of protectionism, this kind of sanctions, tariffs is going to only hurt American people in the form of higher prices, in the form of less job, but it's going to come after some certain time. And that's why many people believe that the action, very bold action by President Trump, is politically oriented. He's trying to gain momentum in November elections. So as soon as November election come out, whether Mr. Trump wins or lose, I think that's going to be the turning point from when America is going to start totally different traditional, conventional free trade spirit. So this kind of action from the initiation of Trump administration is going to end by November election. And after November election, I think general tone of President Trump policy, especially trade policy, will tone down and return to kind of a free trade that previous government has been following.
I see. So you're seeing November as the turning point in a lot of these trade disputes that's ongoing right now. Then how about, meanwhile, how do you think the Turkish lira crisis will unfold from now? Do you think European allies of theirs, such as Spain and France, will just perhaps come out and support it? Yeah,
that's why many politicians criticize Trump. Because after he's taken off the Oval Office last January, Trump has been created so many kind of foes, so many enemies. In fact, all the country in Europe, in Asia, in South America, all the country has become a new enemy against the Trump administration and Trump policy. So there are more than many countries who are willing to help Mr. Erdogan, whether Erdogan has been pretty dictator-like. So I think actually there will be not just the Spain. I believe the China or Russia or maybe Japan or other countries will be willing to help out Turkey, especially in this crisis. So first, the Turkish crisis will not develop into a major crisis, and second, United States will feel that this kind of sanction-oriented, protectionism is going to lose more than what they gain. So I think from November, U.S. policy will be kind of switching over to, neo kind of a free trade environment. I think a pretty political motivated action so far from the start of the presidency.
I understand. That's good news. We hear a lot from the public in Turkey saying that daily necessities and dairy products like eggs and milk prices have just soared. So it's good news to hear that. Thank you for your expertise today. The Turkish lira has pared some of its losses against the greenback, but with many political and economic hurdles still remaining, we'll need to keep a watchful eye on further developments within the country. That's all we have for this week's The Point World Affairs. Thank you for tuning in, and see you next week.